This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 12/21/2020. It is the long-awaited and to some dreaded winter solstice. Well, Nick will have some more to say about that shortly. This is show number 180. Man, Nick, there is no rest for the weary out there, is there?
No, there's not. Today we have a pretty good downturn in the market, but to be fair about it, the volume is light. So if the sell-off was on heavy volume, I would definitely be concerned here. The catalyst for the decline, obviously, is what you stated, the new virus strain discovered in the UK. And at this time, the markets were, very overbought, and the sell-off matches up with the so-called dreaded winter solstice, right? So pretty amazing, but we got a pretty good little flip down. But honestly, I don't see the volume on this move down today. So that's worth watching. We'll see if the trend change is really meaningful. I'm not so sure it will be with seasonality trends in play right now. Usually you'll get light volume around the holidays and the markets can generally move back up. So that'll be pretty interesting in and of itself. But as I always said, you always want to be careful around solstices and equinoxes. And, we've talked about that, and this matches up pretty nicely today.
Exactly. I mean, we couldn't have timed it better here, Nick, when you look at it. So when you're talking about volume, you always follow the S&P 500 spiders, right?
That's right. And, we're only trading 31 million shares today, and it's, a little bit past 11 o'clock. So volume is pretty light. But if we traded well over 100 million and we were down significantly, I would definitely be concerned and my radar would go up. And I think all traders should be concerned if that happens.
Yeah. So the volume really is key here. We've been seeing the market, like you've mentioned numerous times, Nick, and I'm not saying anything you haven't said, but these markets have climbed on relatively weak volume over time. What should we gain from that or glean from it?
Well, that's kind of how it works. So when we go up, we take the stairs. When we go down, we take the elevator. So the volume trends, as long as they're light, you give that market the upside bias. You never really, want to fight it. And then when the market sells off on heavy volume, that's usually the signal. So if you remember on September, early September, I believe on the 2nd or 3rd, we had a pretty good downturn on the 3rd with 148 million shares on the spiders. And the market went from, basically the S&P 500, went from somewhere just under 3,600 all the way down to around, I believe in the end of September, we were trading around 3,200. So you had, a significant drop there. And then, obviously we put a little double bottom, higher low in October and we rallied up. But when you get those high volume days like that from a high, then you got to be really, really cautious.
Right. So you're pretty sanguine about the whole thing.
At the moment I am, because I just don't think the volume is high enough at the moment right now. But I do believe, we have a much more tumultuous market coming in the new year. So
that's
right
what
now,
you said.
Yeah. And right now, I mean, we'll have to see where it closes. I don't want to make any predictions yet because you just never know what can happen. But at the moment, the volume is still light. So we'll just let the market tell us.
Yeah, the market knows best, as always, and never think otherwise. Because when you start thinking you know best, that's when you're going to get burned bigly.
Yeah, there's an old saying in the business. I learned this in the early 90s. Thinking just gets in the way. So you don't want to think, you just want to react. And you react off of the rules that the chart tells you to react off of. So, thinking really just gets in the way in this business.
Yeah, thinking gets in the way in life as well, because when you're thinking, then you're emotionally charged, subject to emotions, and then all sorts of bad things happen. All right, so what happened last Friday, though? The market took a hit last Friday, too, didn't it?
Yeah, but that was we had an options X week, quadruple witching. The market was up for the week. There was rebalancing going on at the end of last Friday. The volume is always higher on an options, especially a quad witching options expiration. So I don't make too much out of that. The one thing I will say about last Friday, though, the Federal Reserve said that the bank stress tests were good enough to allow the banks to start to repurchase their own stock and issue dividends again. So that's a big positive. And if you take a look at today's market, we have JP Morgan up, $4.64. It's a 4% gain. Goldman Sachs is up $16 today. rarely does the market decline and the financials go higher. Those two don't match up very well today. But we are seeing a big surge in all of the leading financial stocks on the back of that news that we got out Friday afternoon from the Federal Reserve. And, the financial stocks are on fire. I mean, take a look at JP Morgan, take a look at Goldman Sachs, take a look at Morgan Stanley. I mean, all of these stocks are up big today, and that's a positive if the financials can get a bid. Now, how long does that last? That's the million-dollar question. We'll have to go to the charts and let them tell us.
Right, of course. So, yeah, it just found it really interesting that we started seeing strength, if you remember, in the financials about 3-4 weeks ago. So, like you're fond of saying, somebody always knows something.
Somebody always knows something. There's reasons for everything. There's reasons why equities go up and down. There's reasons why guys place million-dollar options bets out there ahead of a big news event, right? They know something. So, all we know is the charts. We just look at the pattern. We try to coattail the moves, and that's what we do. But everybody out there should realize that somebody's always on the inside of something there.
Yeah, absolutely. Could not agree with you more. Hey, finally, gold and silver, they were up major in overnight trading overseas in the access markets, and then they got totally slammed. At one point, gold was up like $40, then it was down $10. Now it's on the spot at least marginally higher. Or it's low again. What's happening there?
Well, gold futures today, as we speak, are down about $6.70, trading around 1882. But you're right. In the overnight session, right around 1 o'clock in the morning, gold was trading over 1900, over 1912, I believe. So, that was a pretty big move overnight. But remember, you got hit with that news coming out of the UK saying that there's a new virus strain, a lot of panic going on there. And then gold, sold off around 5 o'clock in the morning, and it bounced up a little bit. And, right now, as we speak, trading down around $6 in gold futures. So, we don't want to make too much out of it. But if you recall last week, I said gold is going to struggle to get above that 1900 level. It's going to really need to consolidate below that if it really wants to get through there. So, we're just seeing the resistance level at work at the moment.
All right. And probably some manipulation as well. What about silver? Silver was also up major, and it's still up like over 1% as we speak.
Yeah, silver's actually having a pretty decent day. It's up 31 cents on the futures. So that's not a bad move. That's about 1.24%. Overall, though, silver traded above 27.50 around 1 o'clock in the morning, then retreated all the way back down below 25 and a quarter, and now it sits at around 26.35 or so. So silver though has been stronger than gold, and I've been saying that on the program. We've talked about that, and I think it still remains stronger than gold at this point in time.
All right, stronger than gold, and that kind of fits the overall long-term thesis pretty well, doesn't it?
It does, and I think we're just waiting on a bigger pattern to unfold, and then gold and silver will be tremendous buying opportunities.
All right, and that is it for today. Make sure you go over, take a look at Nick's site, inthemoneystocks.com, for his extensive trading record and lots of other useful info there. The Twitter feeds, be sure you subscribe to them at ITMS, at Nick Santiago01, at Kerry Lutz. Make sure you send us your emails to kl@kerrylutz.com. Nick, we will pick up tomorrow.
Sounds good.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.